This is my stock market analysis coming up with projections on the S&P 500. But first, this important information, please do read this slide. It tells about our approach to analyzing the market and about you using the information and the importance of owning your own trades. Stock market, S&P 500, cycle analysis and projections with our proprietary level 4 studies. We're going to take a look here at the stock market, and I think that you're going to find this analysis fascinating. I'm going to show you the SPY in this case, looking at weekly, daily, and momentum conditions, and show you how I've come to the analysis that I did, that I thought we would have a minor correction, and then another move to the upside in the stock market. But also, we've been talking about this time period as the time when implied volatilities would begin to move up. And we're seeing that happening in the VIX also. And we talked about rotationary period. And you can see that's going on also as the SPY and NASDAQ have been falling while we've had strength in the Dow and the Russell and the mid caps. And that's all been part of a very big rotation. And we worked so hard to do that analysis and then bring that to you so you have the best potential understanding for the market that you could possibly have. Let's take a look here at SPY. And you can see this is a weekly chart with our cycle analysis. If you are brand new, what you're looking at on the bottom are cycle brackets. That is a tool, a drawing tool, that gives us an idea of the repeating rhythms in the market. And you can see how stark that is when you look at the ideal rhythms in here and at the actual cycles as they formed here on the price chart right over here. So in other words, this was a rising phase, a peaking phase, a declining phase, a bottoming phase, a rising phase. You can see how that all worked out. And the shape of the cycle gives you a ton of information. As you have a correction right in here that finished in the support zone about halfway down from this, and this cycle was configured positively. It says the next cycle has a high percentage probability of taking out that high, which it easily did. The next cycle was the same, a high probability of taking out that high after the correction, and you can see that it did. Now we are in a period of the mid-cycle correction right over here. So this is a dominant cycle, and this is the minor cycle in this harmonic family. These lines right over here that you see right there are where the actual lows occurred, those troughs, and they don't exactly have to happen on the ideal trough area. In fact, they come like 3 bars either side of that, and that's these blue vertical lines in here telling you, well, we believe there's going to be a decline and a potential bottom in here, and then this rising phase right over here. So if you watch the beginning of the show, my opening comments, I talked about the fact that more money is moving out of the S&P 500 and the NASDAQ into the Dow and mid caps and value stocks. But this is likely to be more of a complex top. Why is that? Because, well, this rally right over here was long. And it said that there's only a few weeks to come down. And we talked about maybe a 3% decline in here. It could be as much as 5% if it got sold real hard over the next couple of weeks. But then we think it's going to go up and try for these highs again. That's the highest probability. You can see the minor cycles in here in these very bullish cycles only gave you modest declines right here. As you can see, that was the biggest one. Not much of one here, not much of one here, and probably not much of one right in here, even though we see some indexes and AI stocks getting sold very hard. The likelihood is that there is not a lot of time, and I'll show you that on the daily chart and then coming up. But because we believe that valuations are beyond what makes any sense, and I showed that for the Dow also in the beginning of the show. If you did not watch my opening comments, go back and watch those. So many people scroll forward or only look at this segment on YouTube and miss all of my opening comments. Well, you will have missed a ton, and you will have missed my analysis on the Magnificent Seven. So go back and watch the whole show if you decided to scroll forward. So this rally in here, I don't think is going to get far. These are your resistance levels right here. This is the weekly 61.8, weekly 78.6 on the extensions. These are the monthly ones. So if the stock market got crazy and valuations got up to 205 or 206%, then you'd get up over here to about 585. I give that a very low probability. I think it's likely this sell-off is going to continue. We'll get a rally up here. We'll tickle out the highs over here or just miss them and then turn over again. And this period over here is a period of a lot of risk. Remember, election day, November 5th, and somewhere in here in maybe end of August through sometime in late October, early November, you're going to get into one of these periods where you could get some very hard selling. Now, there's an alignment with the monthly analysis coming up here. And again, watch my big picture analysis and you'll be able to see that. And that says to me that this decline over here out into this October, potentially November period could be very sharp. And you could see potential large drop in Q3, Q4 of this year. That's why I think that in the beginning I made comments that, traders are going to have a lot of opportunity in here, but investors should be getting on their selling shoes for this next rally over here, because that could be a good opportunity to make some important exits. Momentum still strong. This is our reversal scout. That's a level 4 indicator. See that? That's where it turned up right there. It gave you that important signal. That's it was bullish. Then this cycle was now moving up. It did the same thing right over here, where it and it does lag by a couple of weeks usually, where it gave you that signal and then came up. Now we're not getting it rolling over yet on the SPY, SPX. So we're still in a period of strong intermediate momentum, and that's part of why I think that this is only going to be a modest pullback that we're having right over here. Now, if I switch over to the daily chart, and this is the daily chart, and we do this one a little bit different, you can see still the cycle analysis in there, which is absolutely fabulous. By the way, you want to learn about cycle analysis, go to the askSlim website, to the cycle analysis page, workshop page, and you'll be able to watch a video there. It talks all about our workshop and how you can learn cycle analysis. So what we have in here is the actual cycles as they formed. And then what I do is I create what's called a slim cloud based on the shape of the cycle, which had projected to the upside, and the resistance levels in here. Now we're getting down here below the 61.8 on the SPY. And that then gives me a warning that because there's still 2 weeks potential declines in here, that, well, if it tries to rally in here, it's not going to last, and it's likely to go down again. Well, if it gets under this level here, the 78.6, that is at about 547 approximately, then that's going to give you another warning of weakness. And if you do that, well, if you get under 542.52, that's where this cycle low is. That's going to confirm the peak is made, and you're likely to be seeing the momentum turning down. Now, here is the option bias study. This tells you how to keep your positions biased in a particular symbol, and you can see it's here at the P3, the positive 3 level. Here it is right over here, P3. You can't quite see that. Let's see, there's the 3 coming up right there. And when you're in that condition, it says keep your option positions biased long. That is likely to change soon. I think that'll probably turn yellow in the next couple days, and then it'll be in a neutral condition. So we're waiting to see how this shapes up. If we get a bounce right in here of some significance, then we'll be looking for it to stay in this corrective period right over here and in that channel there. If it breaks these channels, then you can see our projections on these channels here, how far we're going to think it goes. I'm going to switch this over for 1 minute to the NASDAQ. Make a mental picture of this as you're looking at it, and you can see the shape. Now, if you look at the NASDAQ already tested that important support. That says the NASDAQ peak on the weekly chart is made. We broke through this warning level right there. We've come down here and tested that cycle low right there, 1957.54. That warns that the NASDAQ has made its intermediate peak. You'll also see right in here that this is still bullish, but I think it's about to lose it. And the slim ribbon right over here has now had a crossover. So when you look at that, for those of you that are members, take a look at looking at the momentum indicators, and here you could see it turning over right there on the reversal scout, and that's telling you that the momentum conditions are changing to the negative. I'm going to move over right over here now to the SPY, and you can see the SPY is still positive on momentum conditions, and this is a level 4 indicator, the slim ribbon PO, and it tells you when there's likely to be upside resumptions in momentum. It's having trouble ticking up right now, as it is starting to look to us like it's going to lose that positive condition. But if I switch over to the NASDAQ right over here, you can see the NASDAQ has turned neutral, as the NASDAQ has begun to lose its upside momentum. So you can see in here again, NASDAQ having that breakdown right over there, while the S&P 500 SPX, come on up there, is still giving more of a positive look. So the SPX stronger than the NASDAQ. That's because of how the weightings are, and we still have these the positive conditions right over here in the option bias indicator. So weakening going on significantly in the NASDAQ, and at the same time the S&P 500 is at an important level right over here. And as you can see, we have not put in the lower tracks yet because it's still holding up. If it breaks this area 54.91, which is the warning level, that is then going to tell me that I need to put in the downside projections in here. And again, this trough aligns with that weekly trough that we talked about, and that is likely to give us a picture of lower targets on the downside, which we should be seeing happen as the market continues to move down. So again, here's that weekly looking like a couple of weeks to the downside. That support right there at 537, the support over here at 529.50. Those are reasonable targets on the downside before we get one more move to the upside. Here is that cycle right over here calling for that decline into mid-August. And then after that, we'll have another cycle in here that I think is going to fail and then give us quite a negative cycle following that. So that is a look at the S&P 500. This is a look at what those charts look like. Let me just change this back to SPY right over here. And you can see here, looking at the intraday, this one right over here, that has turned negative. If you use our market condition indicator, and if you're a level 4 member and are getting our alerts on these things, then you'll be able to really tell when things are changing. So this is a look at the SPY. Let me get right over here and look at SPY again. And this is all of them right over here. The weekly right here, really interesting the way this lays out. The daily right over here, and let me make this a little closer so you can see weekly in this corrective period, daily in this declining period right over here. The look at the positive conditions still in momentum that look like they're just about to turn over, and the first domino falling with negative momentum on the 2-hour chart right over there. So I want to bring in the VIX because this is so important. We had talked about the VIX giving you a look at what should be a pop in implied volatilities coming up. And what we looked at was that these cycles right in here, let me look at that there was a cycle low here. Ignore that line there. This is today. That you can see there's a bad tick in the chart right there. They'll correct that. Now, we thought that we were going to be rising here and there'd be a pop. Look at the perfect cycle right in here. And then where we got this pop. This cycle aligns with the S&P 500 weekly and monthly troughs. And I said we could see a large pop in IVs. Well, we're getting that, as you can see, as it moved up here to 16. This cycle right in here over this next couple of weeks, and you can see where it's pointing to, well, it could get, it could stop here, at the 16, 17 level, or it could get much higher right in here. So the next 2 weeks are a time frame when implied volatility should go up. This was targeted by our analysis, and it really turned out to be quite perfect. So that's a look at the VIX. And that is my analysis on the S&P 500. Summing it up, well, we have this weakness going on in the tech stocks, AI stocks. They're putting pressure on the NASDAQ, and the NASDAQ is now giving a warning of an important peak. Go back and watch my analysis on the MAG 7. You will see where that's coming from, as a bunch of those have had breakdowns. And the Dow is likely, and the Russell, to continue to get bids in a rotation, but valuations are such that there's probably not much more to go on the upside. And watch out for a big failure that comes sometime in the August-September period, with a decline potentially out into late October or even into November, around the time of the election.